Scott.
Jeff.
Thank you for being here.
Pleasure.
So I had the good fortune of meeting Scott when I joined the Thayer School at Dartmouth in 2016, I think. And Scott was one of the board of overseers at the time that really helped advise the dean and the senior leadership on the direction of the school. So it's really fun to be able to have you now here in the Boston area. You can look Scott's bio up. He's done many things, but a couple of call-outs, and I think that's relevant to our conversation here, is the role that you've had in bringing to life some of the brands that we're intimately familiar with. So in the security space, Cloudflare, Salesforce. Many of you have interacted with Tableau and the business intelligence, and Scott's had an integral role in bringing all of those, into the market and then scaling them and eventually setting them free off to do their thing. So, you had an early career, Scott, that started at Microsoft. And I want to go back to that because I think a lot of what we understand about platforms really started with the early computer industry. And it started with the way we thought about the vertical organization of things like IBM and Wang and DEC, and then how that changed over time into the more horizontal. And you can go back even to some of the operating system wars. So the early OS2, for those of you who want to go in the Wayback Machine with IBM.
Nobody here remembers that, Jeff.
Well, yeah, but you see the gray. and Microsoft and Apple, and then the next generation, of course, with Android and iOS. So, you were right there. What were some of the early takeaways that you kind of gleaned from that experience that I think probably did a lot to inform your view as you moved on from a large tech company into the VC world?
Well, I think, for those of you who don't remember these things firsthand, before Microsoft became the dominant company that it is today, IBM was the dominant company. In fact, when I was in school, everybody aspired to get a job at IBM, and I did have an internship at IBM in college. And then when I got to Microsoft, what had obviously happened was that IBM chose a different strategy with the IBM PC, and I think about 1982, and they were trying to get to market quickly. So they decided to effectively outsource a couple of key components. And those key components were obviously the Intel microprocessor and the Microsoft DOS operating system. For those of you who don't go back that far, DOS was the predecessor to Windows. It stood for Disk Operating System, I think. And technically, it was even more rudimentary than what anyone at MIT would call an operating system today. Nevertheless, what transpired was that suddenly, anyone who wanted to write an application for this new thing, the IBM PC, which was a very big deal, had to work with the application programming interface available on DOS, which meant that effectively IBM had granted a monopoly to this control point for this new computing platform. And by the time I got to Microsoft in 1991, I guess it was, right after the release of the first successful version of Windows, which was Windows 3.0, shipped in March of 1991. I arrived in June. The Windows group became important for the first time. And Windows was really just a graphical user interface on top of DOS, which was a command line interface. But nevertheless, it even further boosted Microsoft's dominance of this IBM PC platform, which by that point had become a reference design for many more manufacturers. So not only had IBM given up control of the microprocessor and the operating system, but now this reference design had been copied by dozens, if not hundreds or even thousands of other PC manufacturers, all of whom could effectively produce a comparable product because those two components were available freely on the market and not controlled by IBM. This is a long-winded way of saying by not controlling the whole stack, as had been done before, in all of these previous incarnations of sort of computing, generations of computers, suddenly it became apparent and was very clear to me and everybody else at Microsoft by the time I arrived in 1991 that having a separate control layer made only of software was a really amazing business. And just to calibrate that for you, I mean, I don't remember what the revenues of Microsoft were at the time. This was, there were about 8,000 employees, so it was a significant company. It had gone public already in 1986. It was founded in about 1978, so it was a big, successful company already. But much of the revenue came from application software and other products that Microsoft sold. And what was amazing to me is that the group that controlled 100% of the revenues when I arrived for the operating system business was controlled by 20 people. 20 people, sold licenses to DOS and to Windows to all of the OEM manufacturers. And that generated at least half the profits of the entire company, which I think is an obvious way of seeing what an incredible control position it is to control that interface. So I do think, for me it was formative, to your question about my career, it was formative in demonstrating that not only, I knew software was a great business, that's why I went to work for Microsoft, but suddenly I realized there are certain kinds of software businesses which are really, really special. And I didn't know how often in my career I might encounter other examples of that, but no doubt I was looking for them, very keenly looking for them, at every point since then.
I love that answer, and again, I think I just want to hit on 20 people in effect controlling probably over 100% of the profit, if you think about where that was actually getting spent.
Well, now, Jeff, the application business is also a pretty good business.
Okay.
So there was some profit being made.
So don't say too many things about them. All right. So let's say in a world of network effects, and we talked about this, in some of our prior conversations, and potential winner-take-all or winner-take-most markets, you've got this kind of trade-off. So here you are, you're an investor, and you'd like to prove out that some company has a viable business. And one of the ways that you might prove that out is they actually have revenues. But if you think about a world of network effects where getting scale creates value and attracts additional users, those things are in violent opposition. And so how do you kind of think about coming down on this, do I build a user base first, or do I de-risk the business model by showing that somebody will actually pay for it? And, what are some of the warning signs and some of the metrics that you'll look for in that? Because this feels like one of the fundamental tensions in the investor community.
Well, it is. And I think that this is probably best illustrated by the Cloudflare story. So I'm going to come to that in a minute. But I think that it is, I'm not the only investor who's looking for these platform kinds of investments. I think it's pretty widely recognized and has been for quite a while that these are very, very attractive businesses. And yet most investors still, have a sort of knee-jerk reaction, if you will, especially in the enterprise-focused world as opposed to the consumer world where there are somewhat different dynamics. But in the enterprise world where it is possible to charge people for your software or give it away for free, people are very often biased towards, having entrepreneurs demonstrate revenue traction, and then they invariably measure the value of the company based on that revenue traction. So, even stepping away from platform companies for a minute, I always warn our entrepreneurs, because we're usually involved very early, that there's this often dislocating moment in your life when investors go from investing on the basis of hope to investing on the basis of reality. And reality is usually measured in financial terms. And so, sometimes, the valuation of the company goes up, and then suddenly the company's generating revenue, and the next investor looks at it and says, what multiple of revenue are we willing to pay? And so that, as you said, Jeff, is very much at odds with what you might want to do if, as an entrepreneur or early investor, your goal is to create a platform company in which, you have large enough market share that, your platform becomes really valuable. And you very clearly know that in order to get large market share, you are not going to do that as fast by charging money for your software, building out a sales and marketing operation, all that stuff, the sort of old-fashioned way. If you have the option, which we now of course do with the internet, to give away your software for free, and we can talk about what it takes to have a free offering, that's important. But if you are able to give away that software for free, and people adopt it, very rapidly, and you essentially take over a large share of the market, but then you have no revenue to show for it, investors will often have a hard time valuing that. And so coming to the Cloudflare story as an example, this goes back to about 2010. We were fortunate enough to become investors in the company just after they launched their service, and initially it was free, and adoption was quite impressive. But the instinct of everyone around the table was, in fact, to hire a sales force and begin selling the product. And we had a board meeting in which I said, no, let's not do that. We're just going to slow down adoption if we don't make sure we just focus all of our attention on free. And so, everybody sort of stopped and thought about that and went away and came back to the next board meeting, and this topic came up again. And, the founders very reasonably said, well, Scott, we listened to you last time, and it makes a lot of sense. We understand why we should want to just focus all of our energy on free for a while. But we have this one concern, which is that when we go to raise the next round of funding, the next round investors might not value us as highly if we haven't generated any revenue. And so we I thought that's of course a reasonable concern. And so we made it an agreement that we at NEA would pay a high price if certain kinds of non-revenue metrics had been achieved. And so that's effectively what happened. But nevertheless, it still surprised me when we went out for that next round of funding. And this company was on an incredible tear in terms of adoption. All the metrics would impress any investor, except they had no revenue. And all but one investor decided to pay the price that we were willing. We did most of the round, but effectively there was one new investor, which was Union Square Ventures, which completely understood why this was a good idea. They were fabulous. And so they came in alongside us. But we and the other insiders had already pre-agreed we were going to do most of the round at this higher price. But still, most people just said no.
Yeah.
So it's still a real issue.
That's not that long ago, really. I mean, just 13 years. So, and we've studied this.
And I think it would be true today, actually.
Yeah, I was going to say.
I think it would be true today. We go to board meetings all the time, and I'm often say that the best business model in the world is free. If you have something of real value and very low cost to deliver it, and you can take over the market by offering your free service, that is the best business model in the world, and you're an idiot if you can't figure out how to make money after that. And that entails, by the way, coming up with something else which is of great value to some fraction of that user base. But one of my cardinal rules is you never stop giving away for free the thing that you started with, and the thing that you start with is 100% of what you've invented up to that point. You have to have the strongest possible offering to get the fastest possible adoption, and just know that there's always a way to invent something better that you will allow people to charge for.
Well, let's drill down that one, because I think that's counterintuitive to a lot of folks. And we hear about upsell, we see the ad-sponsored. What in your experience have been some of the most successful ways to then monetize once you've, as you say, built this sort of, you're starting to see perhaps growth decline, it's maturing a bit, and now it's time to start thinking about realizing revenue?
Well, the simplest thing is just to come up with a new set of functionality for which you charge. In the Cloudflare example, what happened was initially there was an offering, a self-serve offering, which was about $20 a month for websites that wanted an extra set of features. I don't remember what they were, but it was a compelling offering for small websites. And they got rapid adoption. It's still a significant fraction of the business today. And then as they invented, essentially more and more sophisticated offerings, they would create new tiers. So the next tier was about $200 a month, and that was kind of tailored to the small and medium-sized business. And then there would be a set of features that they later developed, which they charged thousands of dollars for, and now they have customers, public company you can go see, that pay millions of dollars a year for their offerings. I think one of the things, though, Jeff, to your question, one of the things that's often a little hard to appreciate for an entrepreneur who hasn't done this before is that you think, remember, I think what teased out your question is you said, wait a minute, you want me to give away 100% of this thing I invented? I spent years at MIT inventing this with the smartest people in the world. I can't give this all away for free. I'm not sure I'm going to have something of greater value later. It's a very real concern. But just to be competitive long term in the world, you do have to give away something of real value. Other people are going to compete with the same free model. But what is a little counterintuitive, again, for the uninitiated, is the value that enterprises will place on sets of features which do not require MIT PhDs to create. These are administrative features of the software that do things as simple as create a system of permissions and controls for users in the organization, that create audit logs so that somebody can go back and see what somebody else did, that have, I think of them as systems management features. If you do that well, it's incredibly valuable. And I learned this lesson actually in a different investment. One of my very first investment when I got to NEA, we don't have to go into this in any great detail, it was called Mission Critical Software. It was in fact a systems management software product for Windows NT 4.0 and ultimately went public, was a successful company. But the founder, one of the founders of that company, said something to me once, which I didn't know. And he'd been in the software business a long time. Jim Woodhill was his name, very smart guy. He said, about half the revenue in enterprise software in the world is systems management software. And these are mostly companies nobody's ever heard of or thought about. But enterprises pay a lot of money for software to control other software effectively.
So it's remarkable to hear this in the enterprise space, because I don't know that you were here this morning, but we presented some results from a couple hundred survey responses in B2B platforms, and I'd wager that none of them have yet hit upon just straight up free in the enterprise and B2B space as their starting point. And so there it is, even in 2013. And so, if you were on those boards, I suspect you'd have some different advice.
Well, I mean, one of the obvious initiatives in software is open source software, which is by definition free, and there are probably hundreds of successful open source companies. We've had dozens and dozens ourselves, so I know, at least in that version of free, people understand this dynamic.
Yeah, what we have seen, and let me just see if this resonates, is we've seen enterprise software firms with recurring revenue streams then build out free offerings. And it's almost going the other way around, where they start mounting markets that they don't necessarily capture any percentage of the revenues. Mm-hmm. Have you seen examples of that, or how would you react to that?
Well, I think in the cloud era, I think what you more often see, people, they stand up their software on a cloud and they offer it as a service. Mm-hmm. And that is a more expensive proposition because you're paying for the hosting effectively, yep, as opposed to the open source model where somebody else is deploying it on their hardware or in their cloud and absorbing all those costs. So there's a greater tension when you're in that model, and what we very often see there is usage-based pricing. Mm-hmm. So you say it's not that you're planning to invent the next systems management software, but more that you create some amount of the offering which is free. And here the debate we often get into is, we'll just give away our stuff for 6 months and then we'll charge for it. Everybody thinks that's great. But in fact, that introduces much more friction, in my view, than if you say, we're going to allow a certain amount of annual usage by a certain number of users now and forever. Why is there a big difference there? The big difference is, of course, that if you put yourself in the shoes of one of those users who is sitting in their company trying to decide whether to use your product, if they think 6 months from now they're still going to have to go through the approval and budgeting process, that's a big headache. If, on the other hand, they can say to themselves, my little group of 5 people, we can use this as much as, we're going to stay under the usage thresholds that should be reasonably generous for the number of users. Anyway, they can then fully adopt and use that product and be excited about it. And this model I've seen work many times quite successfully.
Yeah, I love that answer. And one of the reasons that I'm probing this is really for the audience, because somebody who's been there at the beginning to see these different business model experiments and then be able to explain the logic is super useful. I'm going to pivot. And the pivot is going to be, this morning, we talked a lot about data. We've talked a lot about AI. Obviously, we're all enamored with the generative technologies, with the large models. How's that impacting your world? I'm going to assume this has become much of the conversation, but sort of from the investor point of view, what are you now looking for in your portfolio companies or in new companies coming on board with respect to this?
Well, we sometimes joke about startups coming in the door, whether they're fully buzzword enabled, and currently one of those buzzwords has to be artificial intelligence, machine learning, generative language, all that stuff. Yeah. And it is, honestly, I think, almost a clean split between companies that have a fully buzzword enabled, meaning AI and all this stuff, and not. And of course, we have a large existing portfolio, so we see them go out and into the market to raise follow-on capital. And if you don't have some kind of legitimate and compelling story around how you are going to take advantage of these large language models, then people fall asleep or you don't get meetings or whatever. It's almost that stark. And so clearly we could say, well, we're in this incredible hype cycle, and at some point it's going to come down to earth and do what all of these kinds of hype cycles do. There's a huge amount of hype. There's some kind of a huge disappointment, and then the reality starts to set in, and real things happen that are sustainable. And I suspect that will happen here. But at the same time, most of the hype cycles that I've lived through are hype cycles for good reason, meaning that people get really excited about the potential of something. Mm-hmm. And then, as I said before, people invest on the basis of hope, and then there's an expectation of reality, which is usually when things crash down a bit and then they come back. But this is a very real and very powerful set of technologies which I think affect a very large fraction of things that we all do. So I'm personally very excited about it. And I think, when I think about it in a more macro sense, I think it's likely to, create a significant productivity boost to, our workforce and our economy, which we haven't seen in the data that much as, over a longer period of time as it relates to information technology. I personally think this might be the thing that really boosts it. But I also think that, I'm not an economist. I don't know how they do those things. I have a hard time imagining that somebody hasn't found that there's tremendous productivity gains to the internet, tremendous productivity gains to these things. I mean, somebody's not doing that study correctly, in my view. But nevertheless, I think this is on par with those.
Well, and that was going to be the question. And there actually is some pretty compelling evidence that, sort of the productivity paradox and others that some of our colleagues have done that really do tease out the impact of IT. But if you were to look at sort of big changes, electrification, okay, that was a pretty big change. Took a long time, decades, to really come to fruition in terms of its impact. Mm-hmm. I was here as a doctoral student in 1993 when Mosaic popped. And I remember taking this to my wife and saying, this is really important. My wife says, really? How? I said, no, this like integrates all this cool stuff like FTP and fetch and all these other buzzwords and things, and it puts a nice user interface. So I thought that was important. At Microsoft, you had applications, and then one day, I think the company sort of had an all hands on deck and said, there's this thing called the web, and we probably want to integrate that in to everything that we do, because they were kind of running along as standalone applications. Where do you rank Gen AI in some of these prior, or you mentioned, for example, the handset, the supercomputer on a slab there?
I think it's right up there. I mean, I don't know whether I'd be able to say it's more or less than either of those other two, but compared to anything else that you might want to talk about, cloud computing is an example. I think it dwarfs cloud computing. Cloud computing is a replatforming exercise, moving things around, some efficiency gains here and there. Super exciting. Maybe changes the winners a little bit, but it's kind of the same old game at the end of the day. This is different.
Okay. Yeah, I'm going to buy that. So if you think about now tying it back to what really got your attention in the control points, when you talked about the OS back at Microsoft 30 years ago, do you see any of that flavor and the potential for some of those control points to emerge in this industry?
It's a really interesting question. I mean, it seems at first blush as though the early winners, OpenAI and probably Google, Microsoft, these are going to be big companies. They're playing, it seems like a bit of a race to the bottom sort of war that's massively capital intensive. Yes, they're going to create billions of dollars of value, but I don't see them necessarily generating, that resulting in some monopolistic control point kind of position. For one thing, because I think there'll be a handful of them, right? And their offerings will, be somewhat more advanced one to the next over time. It'll, at least at this point in history, I don't see one of those things emerging as a really dominant platform. So I'm more thinking ahead to what can you do with those things and where might you be able to generate those kinds of advantages. And whereas back in the old days of software only, you would think in terms of interface control, API control, that sort of thing. I think in this era, people are more thinking about data as a data advantage, as a not necessarily control point, but at least some kind of a moat that could be sustainable and differentiated over a period of time. So in a lot of the companies we're looking at, that's one of the things we're looking for.
So I realized that I had a lot of questions and I chewed up a lot of time, but I do want to leave a moment or two for others, because I can pepper you all day long. Yeah, please. There's a microphone right there. Or holler.
Just holler loudly, we'll get it.
Yeah.
I was going to say, I was going to holler. Use a microphone for the online audience. Yeah.
Oh, okay.
So in the context of today's discussion earlier about the sort of circular platforms that are starting to emerge, what's your thinking now, because you've got such a deep history in sort of the B2B space, clearly have insights into the freemium model, which again, I've got a lot of interest in that one, because in the B2B space, it's ironic, but freemium doesn't work as well because enterprises tend to be a little bit leery of free, having sold into them a little bit. So it's kind of hard sometimes because you do want to bring that consumer mindset in, but put that aside, we are kind of on a precipice of a transformation of some of these original platforms moving towards this new world of circular that Peter's kind of talking about and the whole panel's talking about. What are your thoughts on kind of how that's emerging today? Because that's a big space.
You're going to have to help me understand what circular refers to.
Scott wasn't here on that.
Oh, you weren't here earlier. I'm sorry. Okay, so this is really where you're taking sort of old linear supply chain-based models that were marketplaces built on top, a la eBay, that are now embracing the back end of selling some of that used, reused, and recycled materials back into the supply chain, right? So you create a circular aspect where historically all marketplaces for the last 20 years were predicated on the linear supply chain.
One direction, yeah.
Correct. And so with all of the kind of push in environmental efforts today, circular is really becoming kind of the top end kind of theme where you've got 8 billion people, $100 trillion global economy, and 100 million tons of stuff pulled out of the ground every year. 35% of which is pure waste before first use. Not that I have the data, but just in case, there you go.
Thank you.
And so that is kind of your TAM right there for circular platforms. So maybe I'm asking a question you haven't thought too much about, but there seems to be a theme here where we're sitting in this decade of supply chain transitions, and platforms are driving that right now. They're just emerging the definition of what those are, and it's kind of an early investment thesis, but I don't know if you've got thoughts on that.
Well, first of all, I didn't know about this. Okay. Very exciting development. Love that that's happening. It does strike me that there's an opportunity for marketplaces to play that circular role. It's not. It probably requires some work to put all those pieces together because they don't necessarily all connect.
Correct.
The suppliers that make stuff are not necessarily connected through that marketplace, but if the marketplace does the right things, it probably could close that loop, and if it does that well and might be better positioned than anybody else to do it, it's pretty cool. I like that.
Yeah. So we were going to take one short question, and then we'll let people go.
Yeah, hello, I'm Tosin. I'm based in Oman, in the Middle East. I like what you said, that you need to be buzzword enabled. However, you also don't want to miss out on the next Facebook or the next Twitter. So what would you look out for in the generative AI startup or the next LLM organization that comes to pitch to you, so that you don't have that regret that, oh, I would be worth $50 billion if I had invested in that ABC organization in 2023. Yes, we know it's still on the inflection point and everybody's excited, but what would you look out for to identify the chaff from the wheat?
Yeah, thank you, Tosin. I think, first of all, I think you're touching on something really important, which is that to be a really successful investor, you have to be ahead of the curve. You can't be just looking at what everybody else is enamored with right now. So in our shop, we think of it as, you have this stuff coming straight at you, but you always have to use your peripheral vision to see like what's emerging over here, over there, that could become really significant. In terms of, the artificial intelligence, there's, I think of it in terms of innovations, everything from the silicon to the applications. We're looking as an example at alternative semiconductor designs that would be more advanced than what NVIDIA is producing by a lot, not a little. We've looked at algorithms, if you will, broadly defined. They're more like models of how artificial intelligence can work that are in fact, again, a quantum leap above in terms of ultimate performance, what's available today. We looked at one very carefully. We didn't invest in it, but I thought it was super intriguing. And I expect there'll be more things like that come along. And then, at different, there's a lot of vertical applications of things. So one of the things that I think is we'll probably start to see is a shift away from using large language models to enhance existing applications in some way. Some of those enhancements could be pretty fundamental, steps forward to entirely brand new things that did not exist before. And if I look back on previous big, waves of innovation that I've experienced, very often the most exciting things, the things you're referring to that become really enormous, are not predicated on existing stuff. They're somebody just thinking completely out of the box about something new and developing something that just didn't exist before. I mean, that's the kind of stuff I'd really be excited about. And
that's a great landing point, Scott. So,
yeah, but
thank you.
Sorry to challenge. Quick one. What if it was like
listen, we're at time, but thank you so very, very much. All right.
Thank you very much.